Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's best stock picks. Well, August 24th, 2020, and it's a Monday, 1 week left in the month, which has quite frankly been a really good month to trade. Traditionally, this month is a slower month, but we're in anything but a traditional world right now, which is actually what we're going to headline today with the news, the COVID news, actually. Whether or not the news is now sell the news because we've priced that particular news in. Has the news been validated where it is something that has legs and skyrockets us to new levels? I personally think this week is going to kind of be choppy and sideways. We did last week what everybody has been waiting to do. The S&P closed and got up to new all-time highs. What's left? Earnings season and all those reactions, for the most part, for the larger companies, has been now completed, for lack of a better way of putting it. We did see a couple of stocks that kind of bucked the trend where they had disappointing guidance going forward, but reversed, and we're specifically talking about NVIDIA and Walmart. We'll take a look at those charts pretty quickly, but the biggest thing I want to talk about today, by far my biggest trade of the week, where I'm expecting a massive move in volatility this week. If it's to the upside, we're going to partake in it and look for a really big trade for the week. As a swing trade, quite honestly, it probably won't be something that we'll be in and out of, because if it becomes obvious, if it does exactly what we expect it to do, there's not going to be any reason to get out of it. However, if it trades to the downside because it's at or near all-time highs right now, we're just going to let it go. So this is what real trading is. Real trading is building a scenario, knowing exactly what you're going to do. And if it unfolds, great, get in there, attack it, be confident. If you have a game plan and it doesn't unfold, that's a part of trading. Just let it go, let it sit back and do nothing. If you find these videos helpful, definitely click down and subscribe. And if you want to trade with me in real time every day, definitely learn about the boot camp. I'd love to see you on the other side. So we're going to head over to the charts. We're actually going to start out with news, which is super interesting. I don't know if you've heard about it or not, but the FDA issues an emergency use of convalescent plasma for COVID-19 treatment. Now, this is the part that scares me. Emergency use, FDA issues emergency use. I don't know anything about medical stuff. I just want to say that clearly. The FDA doesn't issue this kind of stuff willy-nilly, like my way of putting it. But from a trading perspective, that's the point I want to get across. From a trading perspective, if we're looking at the SPY right now, we are up here in what is basically now a 100% return back to where we were. The question now is, where do we go from here? What are the odds of following through right now? And more importantly, what is the catalyst for us following through? We obviously know that the stimulus package was the catalyst here. So now in the back of your mind, is there another stimulus package coming? Will $300 checks to the middle class end up being something that's going to turn everybody's life around and we're going to go back to normal? What we're going to pay attention to now is the weekly chart. So the weekly chart, we basically had a 1, 2, 3, 4, 5, 6, 7, 8, 1, 2, 3, 4, 5, 6, 7, 8 week rally. We had an 8-week rally with very, very little pullback. And as a matter of fact, you could say we had 1, 2, 3, 4, 5, 6, 7 out of 8 weeks were well bid, where we continued to make higher highs, higher lows. And except for that one red candlestick here, we were actually trading above the open. So Monday's price, we traded above that for the entire week. But now we're here, and obviously the futures are up now based on this COVID news. Let me actually dial that in just to give you an idea of where that's what the news has done to the futures market, right? So what does that mean? What does that mean? Where do we go from here? Look, the bottom line is we're in the middle of an 8-week rally. We're at the tail end of an 8-week rally. We've gotten all the way back up to all-time highs. New, fresh, positive news has come out into the market. The question is that news sustainable enough to continue to push to new highs? Now, from a trading perspective, I believe that we are due for a pause. The market pause, if not pullback. However, what I believe doesn't matter. What I believe doesn't matter. It's been very frustrating that the market just keeps crawling higher, crawling higher, crawling higher. And from a market perspective, the trading opportunities, meaning trading the SPY, the S&P, it's just a little bit confusing how it keeps floating higher on lighter and lighter volume, but there's still tremendous intraday, tremendous from day-to-day opportunity in stocks. And one of the things we keep commenting on in the boot camp is that the sector rotation from one day to the next, where it goes out of technology and back into technology and into home builders it's just amazing if you're on top of your game. But the trade of the day that I want to talk about this week, and you might not be able to see it that clearly here, but you can definitely see it here. I was called out by Jason over the weekend, Jason Miller in our community, and just an amazing idea that Facebook just continues to consolidate near all-time highs again, right at the precipice of all-time highs again. So we consolidated 2 weeks ago, consolidated last week, and generally speaking, when stocks come out of these multi-week consolidations, you get just a monster expansion in volatility, which means that we should see a really large green or red candlestick if it's priced in already. I'm looking for a large green candlestick, and this could be one of those trades where you buy on Monday and you get out on Friday. Apple is obviously at the top of the list as well. It's up another 2% this morning, which is $11.50. It's trading right now over $500 pre-market. Obviously expecting it to open up there. And you can see here on the weekly chart, just from 1 week to the next, there's nothing to do in Apple other than buy since the earnings came out, since they announced the stock split. Tesla obviously meets that same criteria. All-time highs over 2,000, trading higher again today. The one thing that you have to be aware of is you need to know what type of trader you are. And for example, are you investing in these stocks or are you trading these stocks? One of the problems that I see, especially with newer traders who are trading actively for the first time, they're confused about whether it's an investment or whether it's a trade. And if it's a trade, you need to know what profit targets look like. You need to know what stop losses look like. It's very challenging to be successful if every trade you're getting into, you're saying to yourself, well, I'm not sure where I'm getting out. That's really where the confusion comes in, and that's really where you end up getting out of winners too soon. You get out of the losers way too late because you haven't defined what the trade needs to look like to be profitable. So looking at JD here, the stock is absolutely still along. It's exploded now actually all of last week, which was an amazing week to trade the stock. But would I be initiating a new swing trade on today's higher open? The answer is no, because of how far and how fast it's come. So today's higher open, as I've said recently, I would be looking to book a profit on a higher opening, which we actually got here, and it got a little bit choppy. So that's my model. That's my window of the market. So I'd still be day trading the stock, but I wouldn't be initiating a new swing trade long because it's already done what the stock normally does. And we trade for what normally happens. And that's really clearly outlined in that stock right now. Some other ones that are in play today, Plug is an interesting one. It's actually got some really good, clean price action since it broke out of here and paused right around the $5 level. And I generally don't trade these lower price stocks, but this has actually gotten some pretty consistent daily volume and price action, bullish gaps in the direction of the price action. And now it's paused for a couple of days and looking to initiate a new trade here. Groupon is one that we called out last week as well, has also consolidated for a couple of days, looking for a new swing trade here, looking for it to reach 35. GRWG is not one that necessarily pops up into my list as well, but now this stock is also consolidated for a few days. So today's lower opening is going to be interesting to see if we can find a spot to bid for the stock and look for it to retest that 22 level. NVIDIA is kind of off the charts again. This is one of the two stocks that I said that had disappointing earnings guidance going forward and had a big lower opening. And you can see here this day on Thursday, it was actually much lower, rallied that day and followed through again. And you can see we're actually opening up higher again today too. Walmart did the same thing. I have not been inclined to trade against poor guidance. NVIDIA seems to be the one stock that has really bucked the trend. Walmart, for me, it was a buy on Friday. I need to see the stock get above 132. So I'm going to stick to more the theme of the entire earnings season, where earnings guidance that was poor. I'm not buying. However, Walmart has a different story because Walmart Plus is competing with Amazon, which is scheduled to come out, I believe, next year. So it's a different story than just the earnings. So this is where you really learn to become a trader, is put those pieces together. W broke out of a consolidation on Friday into a trend day. We're looking for follow through there as well. It's not too late to initiate a new swing trade in this stock either, which obviously is now at all-time highs. DHI as well. DHI is actually now well bid coming out of a 2-day pause, looking for a new swing trade there long. It's a little bit difficult to be initiating a stock at $3 higher. So what I'd be looking for here now is you wouldn't go in with the same share size on your initial entry, because this 2-day pause was really the entry for this new swing trade, and you're getting involved after 2 days of buying, so you need to be a little more careful with working the order there. Lennar was called out by Sari in our community last week, and really nice job pre-market identifying the right sector to be in. Obviously, anything that's at all-time highs, you have to continue to take a look at. Nike matches that criteria as well, where we had a really nice bullish gap here, paused for 2 days, consolidated here, and punched through. So again, it's 2 days later, definitely still looking to be long, and you can see we're at all-time highs. It's just a question of working that order. Costco actually punching through and teasing us with a new breakout as well. And again, this whole sector, retail, is actually punching through. Target was looking for follow through on Friday, and now after the bullish earnings gap, we have an inside day on Friday. I am looking for a trend day in Target today. And run is one that we keep waiting for it to get above 48.30 and 48.50 and stay there. Looks like we're probably going to do that on today's opening. And the biggest one that I'm looking for at the end of the day today, other than Facebook, which I outlined before, it's going to be very interesting to see if Expedia, which finally got above this 88 level, closed above it. You can see the last few times it got up here, and especially here, it failed. I want to see it get above there and close above there again today, because there's plenty of room to go, at least up to 112, if not 125. So those are the ideas that I'm taking a look at today. Look, the bottom line is, whether you believe the market has exhausted itself up at this level, we're still well bid across the board. And as long as we remain well bid, you can confidently get in there and feel like you're making the right trades. If they follow through, if they don't, that's a different story. But you have to continue to buy into these stocks, because there's no reason to do anything but buy them. Don't get cute and look for a sell short, because you're going to end up believing the one time it works, that's the right trade, when you're missing out on all that easier correct side trading as it keeps punching higher. So the only thing I would say is, some of these stocks that are gapping higher this morning, such as Apple, you're going to have to wait a little bit for it to give you a spot to manage risk. If you're going to buy a $510 stock within the first few minutes of the market opening, you're going to leave yourself susceptible to getting stopped out quickly. You need to identify some spot to manage risk before you get involved. So a lot going on today. There's the COVID news. There's earnings being digested. There's all-time highs. There's the RNC convention, the Republican convention this week. A lot going on. So look, amazing opportunity for August. Let's finish the week really strong. And if you have any questions, definitely leave me a comment below. Thank you.